Moon Platoon, this is what's going to happen in the next couple of weeks. And this is exactly the mouth noises you guys didn't subscribe for, but what you did subscribe is a brand new looking into the DD that we have been neglecting. Yeah, we haven't covered much of the DD on the Superstonk or AMC stock subreddits, but today is Saturday and we're starting a brand new weekly tradition of covering what to expect for Monday thanks to these DD writers Glitch Recall. Hey, that sounds familiar, maybe a mod on this channel. Let's give some major shout outs to the people that make the DD possible, including what you guys are expecting from PC Tracer, markets breaking up, and a path through the latest events. So we're going to talk about reverse purchase agreements. We're going to talk about the NSCC 002, and at the end of this video, you're going to see who we are going to cast as Jim Cramer in the Superstonk movie. Perhaps. It's going to be a controversial pick. Let's see what you guys think. But in the comments down below, before you can, go ahead and shout out which like you are on our way to 2,000 likes on the money. And if you guys want to stay until we're in the money, a subscribe or a ring-a-ling of the bell button is the best way to move forward. So Meatball and I are going to bring you through what's going to happen, a path through latest events. What are reverse repurchase agreements that you guys have been asking on the chat for a long time? Well, there are short-term agreements to purchase securities in order to sell them back at a slightly higher price. The securities being purchased here are treasury bonds. Until June 16th, the RRP was fixed to 0.00%. That's a pretty good explanation on this argument. You guys can find that link in the description as well as this one. Make sure to give PC Tracer a upvote to make sure that we have signed in and appropriately given him the due that you need. So wait, are you saying that banks were doing trades for no profit? Why? That's right, due to rate being zero, banks didn't profit off of RRPs, but they still got T-bonds for money, and this is the key in the whole thing. Money on the bank books are liabilities and bonds are collaterals. Banks don't want liabilities because they have to pay interest to their depositors, and every dollar they hold in cash increases operating costs and is eaten away by inflation. So losing money this way. After COVID, banks got even more cash aside and they are sitting on them. You have to remember that during the last year, about a quarter of all dollars have been printed. So that is looking at the dollars in your pocket, right? Thinking about this, right? 1 out of the 4 of these is printed in the last year alone. Crazy. The main goal is to save Wall Street, but this obviously increased inflation, right? Not real money. If you guys wanted your own prop cash, link in the description down below. What has changed now? Well, the Fed raised rates to 0.05% per annum since June 17th. Oh yeah, that was that was 2 days ago. RRP that day also spiked to all-time high of 755 billion and 68 counterparties. As of yesterday, it was at 747 billion with 61 counterparties in, meaning the all-time high average by counterparty of about 12.25 billion each. So RRPs, that is going from 0%, like making no money on it, to a lot of money. Guess they were in the right markets, but just perhaps at the wrong time. To get the idea, the previous all-time high was 500 bill with 59 counterparties, 172 billion less. Just look at chart going uppy, right? Charts are almost moving synchronously till mid-May. Everyone wants to join this party, right? Obviously, you want to make lots of money. The Fed raising the rate this amount, like the counterparties, increased considerably. On that day, Fed also told on mainstream media that inflation at the end of the year would be slightly up the promised 2%. We were watching Jerome Powell, Mr. Fed Chair, talk about that extensively during Fed Day. Is a miserably 0.05% per annum really so desirable by institutions, even with inflation at higher levels? Well, in their opinion, there is no good investment out there, and institutions prefer solidity even while losing money due to inflation. Also, U.S. high-yield corporate bonds yield real yield went negative. The only investments that are giving positive yield are way too risky, right? So CCC bonds, for example, remember, they also are a step away to D. Default. Remember, we were seeing some pretty dirty, gross bonds from from Citadel themselves, right? From Kenny G wanting to make a little bit of money, but those bonds were junk. So no good investments. Every bond is considered junk right now, and Fed giving a little more than 0% is more appealing than anything else. So Just saying. Giving away interest will also likely increase inflation even more, right? Money printer going burr. But that's not only the only piece that you have to worry about. Inflation, that's a secondary piece, right? It's the general principle that increase in prices and fall in purchasing power of money is an inevitability that's tracked with the actual value of the dollar. You can just go back in time and see the value of your dollar increase substantially, or go forward in time and notice that keeping your money under your pillow is one of the easiest ways to just throw out buckets load. It increases the more money circulating, but how much did it grow? Whew, looking at a classic 5% inflation rate. But is it true? Inflation is way too much. Are you sure about this number? They're not sure about the rate right here, but this 5% is publicly available, and it is the highest reading since August of 2008. Yeah. It's pretty bad. That is the crash of the 2008 financial crisis. What makes them suspicious? Well, raw materials with high production are sold for more than 5 to 10% of their price in 2019. So they know that this is shortage for them. So they will track the price of February 2019 compared to February 2021. So this is a best way to do it. Let's just scroll down to the conclusion, right? Fed is promising to lower this rate. Is it Fed or is it FUD? What could be the real inflation now, right? As of the current percentage, this DD, right? We have DD that talks about billions, if not trillions of naked shorts, but there are also DD that does back of the envelope calculations of 20% interest. Right, so if you guys are excited to do your own research, do it along the lines, but remember, the speculative parts, the parts that are behind the napkin, take that with a huge grain of salt. Collaterals. What is collateral? The term, it refers to an asset that a lender accepts as security for a loan. The collateral acts as a form of protection for the lender, right? You're probably doing this with a couple of the contracts you go in on a day-to-day basis. That is, if the borrower defaults on their loan payments, the lender can seize the collateral and sell to recoup some or all of its losses. So T-bonds and reverse repos. On May 4th, this NSCC 802 got in place, and it defines the only acceptable form of qualifying liquid resources to include, among other things, lines of credit without material adverse change provisions, just making it a little bit tricky for people to provide non-liquid, non-cash based collateral. So now institutions are trying hard to find good bonds, and they can just rely on the treasury ones through RRPs. All of the numbers are increasing daily, and this is not a good sign at all. This indicates that they are exposed more every day than the day before. So the margin debt keeps rising, right? Once again, easy to tell because the charty go uppy. And now the NSCC has filed a rule. And this rule could be approved as early as Monday. But remember, approval does not mean it goes immediately into effect. It does have to go around to the SEC. The DTCC is only a private organization where the SEC has the lay of the law, lay of the land, that gets to give the check mark next to it. So in terms of speculation, what we're seeing here for the SPY, what we're seeing in terms of correlating the RRPs and what the S&P 500 is actually performing as. No correlation, let's focus on the second period. Now you can see since May 12th, they've been moving almost identically except the final part, the tail end. Tesla also seems to be related, Virgin Galactic. You can go through all of this DD yourself. I'm putting in the description down below. So what is next? Too long didn't read. This Monday coming up, NSCC could be approved, and if so, we could see a drastic market change since everyone is over leveraged soon, right? Not just because if it gets approved doesn't mean it goes in effect. Soon people will start seeing a change in their strategy, which could easily start making the markets completely different, right? So it could reach even 2 trillion on June 30th. Inflation could be even higher than now, and don't worry that on July 1st mortgages could start defaulting. And another DD for you to peruse. We are already in the end game and we didn't know. A market crash seems to be on the horizon, and it will hurt so much that even 2008 may have been a joke in comparison. So we've had Austin Toba to talk about impending crashes, but now on Tuesday, yes, the middle of the trading day Tuesday, we have Dave Lauer, ex-Citadel data scientist, whistleblower, coming on the show to talk about what he thinks will come about this DD here, and DDs very much like it, such as FTDs spiking. We covered parts of this DD over on the live stream from yesterday, so I will also link it in the description. Thanks to all of you who made it to this part of the video, because you're cool. Let's take a look at who user Go Blind or Go Home wants to petition to play Jim Cramer. It's pretty good. it seems like they make the same kind of faces. So, Louis C.K., is he canceled? Is he uncanceled? What do you guys think? Should he play Jim Cramer? If you got all the way to this part of the video, of course, I am going to do a fun thing for you. I'm going to have a raffle for the comment section. So, let me know. Answer the question. Do you think Jim Cramer should be played by Louis C.K.? Why or why not doesn't matter. You'll be entered to that raffle. I'll pull it on the next live stream on Monday, or perhaps we'll have a surprise live stream tomorrow, Father's Day, the anniversary of this channel. Speaking of which, we did get to our 100,000 goal. 100K is not a meme. We have been giving out prizes all the time during those live streams. So if you guys haven't turned on the bells for your notifications, I know most of you have subscribed, but that just goes the extra mile. The most extra mile is, of course, hitting that join button, and that lands you on the end screen with the Moon Platoon Grillionaire and the Space Legend tiers. And we'll see all of you in the money. Peace.